Hello everyone. Next, let us understand about commercial paper. So, commercial paper is a very important concept under the topic working capital management. So, let us understand what is this commercial paper in this session. So, basically, there are different concepts comes under this working capital that is for short duration between within 1 year. So like trade credit, commercial paper, promissory notes. Okay. So like this bank finance, short-term bank finance. So like this, we are having so many working capital finance. Okay. So here now we are going to discuss about commercial paper. That is, it is a no unsecured promissory note. Okay. So, where it is what issued by eligible entities, the purpose of issuing this promissory note is to raise short-term funds. That is within 1 year. It starts even from 7 days. Okay. So, reason it may be like for operational requirements like payroll, inventories, liabilities, there might be many reasons. Okay. That too for short-term funds, just to raise the short-term funds. Commercial paper is what issued by the companies. Okay. So where it is issued at a discount to face value, carries no collateral backing and reflects market driven interest. See here also, you know, the person or an individual who is receiving that commercial paper, probably they get in return some discount rate. Okay. So that is the reason of receiving the commercial paper. Clear? So next is features or characteristics. Like first one is um, probably it is what short tenure. Okay. So that is what I said now, 30 days to 90 days. It's very, short period. This commercial paper, it works and it is unsecured nature. Okay. Here you're not having any collateral and all. So you're not going to provide any kind of securities. Okay. So that is why it is unsecured nature. And next is, high credit worthiness required. See, only with firms with solid credit ratings. So, they have that assurance, definitely they can able to repay the fund. Okay. And next is discounted issuance, like, all the principal amount along with that, some discount rate. Okay. Which is what mentioned in that commercial paper also. Okay. Based on the face value, some discount rate, that is what the benefit that investors they're going to receive in future. Next is limited regulatory barriers. So, like you're not having any different or complicated formalities and all for this commercial paper. It is actually very simple. Okay, and transferable in the sense it is freely transferable. Okay, enhancing liquidity in the secondary market. It is not a complex process. Okay, one person is going to issue, another person is going to get the commercial paper. So between the two parties, it is going to happen. So it is easily transferable also. Okay. So institutional focus, it is issued in large denominations, making it more suitable for institutions rather than retail investors. Okay. Like who are actually issuing this commercial paper that is mentioned here. Next is flexible focus. Sorry, flexible usage. See, purpose is again, working capital finance fund is mainly for, for satisfying your short-term financial requirement, right? So that is the thing. And then debt refinancing or short-term investments, whatever. So commercial paper types, first one is drafts. Okay. So just to meet no immediate cash needs. Okay. Different persons will be here like drawee and then drawer. Okay. So who is buying, he will be like a buyer of the draft is called as drawer, and then who is issuing, that person will be called as drawer. And next is promissory notes. Yes. And then all the details will be mentioned over here, like with the interest rate, specific date, and all whatever. And next is receivable backed commercial paper. So when you are going to get back Okay, so that all the details. And ABCP is asset backed commercial paper. So it is issued by purpose vehicles and backed by underlying assets such as mortgages, loans on other securities. CDs is certificate of deposits, okay, and then ECP is Euro commercial paper. See, all the commercial papers are differing by by light changes or lighter differences. Okay, so where it is what issued in the form of currencies, and LC is letter of credit. So it is like through banks this process will happen, and then structured notes is another different thing where underlying assets, stocks, bonds, all such things will be mentioned over here. And next is what registered notes. So where here registered notes are securities. Okay, where investors' name or centralized ledger will be mentioned. So cost effective, advantages, yes, true. Liquidity, flexibility. And next is disadvantages, credit risk. Sometimes it happens being unsecured. So initially we said that is unsecured concept, right? So that in that case, credit risk is here, and next is market dependence. Okay, so it is heavily depending on the favorable market conditions. So no other go. These are the two things considering as the disadvantages. Thank you.